Good morning, traders. Welcome to another week in the wonderful world of foreign exchange. This is Cayman. Ryan is off today. I'll be your host for this session. It's another busy week ahead of us. We've got a lot of central banks coming out. The major ones, of course, what everybody is looking at are the Bank of Japan and the Fed, but there are some other interesting ones as well. But before diving into what's going to happen next, especially the Bank of Japan and the RBA, who are the first ones to announce their interest rate decisions next night for us, late in the New York day. We are going to look at some of the headlines that came out of over the weekend. Not a lot to really talk about, I would say. Nothing really market moving as such. Although we had, of course, the result of the Russian elections and no surprises there. Apparently, according to the officials, the biggest victory for Putin. He immediately took the occasion to send one over to Macron, who is trying to push more cooperation for Ukraine. So another round of bellicose comments there from Putin. But let's see what happens next. That is not really, even though it's this story is just not going away. That is perhaps not what we FX traders are going to be trading the most on the back of right now. In other comments, and there really are not that many, I must say, we saw ECB, the cost coming out over the weekend and also sending us to June. He says that the ECB could cut in June if all the conditions are in place for it to be so. Then there's a few expectations. The banks are changing their expectations, and now look at the yields in a bit. Goldman Sachs is now screwing back its expectations for the Fed, coming down from 4 cuts to 3 cuts this year, and JP Morgan finally came back to their senses as well and going for 75 BPs cut instead of the 125 that they were thinking before. Now, as I will show a little bit later, which is interesting, is that the market is already going beyond what the dot plots were showing. That means starting to price in lesser cuts than actually the dot plots. This is going to be the interesting one to watch when we will have the FOMC meeting results later this week. Elsewhere, we have seen the New Zealand, and that's not on the calendar, I think. The New Zealand Performance Index came out a tad better than expected, came out around 53 versus the prior 52.2 or 52.3. The NZIER, though, which is the economic research in New Zealand, they expect still very anemic growth for 2023, 2024. They are only expecting 0.5% of GDP growth in New Zealand and 0.8, which is not much better for the 2024-2025 year. So the expectations there are still very much being kept in check. So that is one to bear in mind, like a little bit like the Germans, who are continuously revising their growth outlook lower. It is a bit of a global phenomenon, ex-US, by the way. Although we've also seen the different nowcasts coming out, revising Q1 a little bit lower in the US as well, but still well above growth that we may see elsewhere. What else? China. Let's move over to China as well, since we are in that area. We've seen those numbers coming out. Very, very good. Well, very good. A bit better than last time, but much better than expectations. Industrial production coming in. Retail sales sort of holding up as well. We haven't seen too much of an impact on the Chinese yuan on the back of it. But Oh, okay. The unemployment rate is ticking up, but that's still for Chinese norms not massively high. But then we had the NBS press conference out, and they are still relatively upbeat. They are saying that the real estate market is now in the process of readjustment. Of course, they are officials; they have to say things like that. And they say that China can still achieve their growth target that they put forward for this year, which is around 5% now. As I said, not much impact on the Chinese yuan, but it's something that I've been talking about before. We will have to monitor that as the year goes on, to see if we start to get some sort of better numbers out of China, because that's going to impact a lot of things, as we know, not only trade, but also what's happening in the commodity sphere and possibly gold and things like that. For what the really weekend headlines are, I think I've done already the rounds there. As I said, there was not a lot of really market moving. Let's have a quick look back on what happened on Friday. So we've had industrial production out in the UK, in the US, sorry, came in a bit better than expected, although the prior was revised a bit lower. Michigan inflation expectations remain the same. They remain the same as well. It was a tad lower on the consumer front. We also had a negative New York Empire State Manufacturing Index. That thing is extremely volatile. And what happened in the market? The market just shrugged it all off. We barely moved into the end of the week. One of the reasons for that is likely that our FX markets were spectators of what was happening during the quad witching expiries in the equity markets, and we were rather spectators of what was going on there. And now we are waiting for what is to happen this week. Okay. Other data we had last night, we had the Japanese machinery orders, also pretty volatile. But if there is anything that would worry the Bank of Japan or alarm the Bank of Japan, is we had extremely high wage results and out of the negotiations. So that is something that the Bank of Japan is, of course, that's been enough documented, looking at. But if you look at economic data, they are still not showing a very big rebound. Okay, so that is something that when we look at Bank of Japan expectations, you don't only look at those wages, you have to look at everything that's going on. And look, this is the whole of 23. It hasn't been really, second half at least, hasn't been really anything spectacular. And other economic indicators are kind of showing relatively similar pictures, all right? So that for the machinery orders. We had the Rightmove House Price Index coming out of the UK, but there, Sunak is struggling a bit, right, with his MPs, with his Tories, and we've seen this morning sterling seemingly looking a little on the weaker side. Is the market starting to take notice of finally of what's going on the political side in the UK? It is possible he really doesn't want to announce even the elections in November. He said that it may not be the right time to look at those, and it does seem that the market is a bit reluctant here on the sterling as well. And I'll have a quick look at what's happening in sterling later as well, before we dive into the bigger event, which is of course the Bank of Japan and then the RBA. We've had the final CPI numbers out of Euroland today, exactly where the estimates were. Trade balance moving on there. So next today, we will have just the industrial product price index, the raw material price index out of Canada. a bit of housing data out of the US, but not really any big announcements or big data coming up before we dive into what is happening next. So we do have a few auctions as well. We have a pretty well-filled US auction program out this week as well. It starts with the shorter end of the curve. We will have 3 and 6 months today, if I'm correct. Yep, there it is. And then the rest of the week we will have also 10-year, 20 years out, and the another round of short ones, the 1 year as well. So we do have a bit of a treasury auction program to look out for this week as well, ahead of and into the FOMC. All right. So where are we going next? Well, you know what? We are going to talk straight away of what is going to happen next. And next is the Bank of Japan. So where are we? We have seen, just if you look at the 10-year yields, we have seen that those yields are slowly creeping up. We had a bit of a small setback today, and that is because there was a round of unscheduled bond buying from the Bank of Japan. It's funny, just the day before they announced their interest rate decision. So we had 3 trillion yen of bond buying today, which was unscheduled, and that brought the JGB yields a tad lower. It's nothing huge, nothing massive, but is it really a coincidence that it happened when the 10-year yield tried to get above 80 BPs? Not sure, okay? So I think the Bank of Japan is sending us a signal that they still will want to keep a very close eye on what the bond market is doing, and they don't want to let things run out of hands, okay? This is still my idea, this is still my base case. We also had the cabinet chief Hayashi out overnight and repeating what they've been saying since the start of Ueda's tenure, saying that he expects the government and the Bank of Japan to closely cooperate. And he expects the Bank of Japan to do what is needed to on the monetary policy. So a little bit of a hint, perhaps, to Ueda and friends saying that please don't go too fast because we still need to fund our deficits. All right. So going back onto the dollar yen here. Oh, sorry. Going back onto the yen. So what's to happen today? So we went from a virtually baked in the cake April move to a 50-50 now on what they may do next night. All right. They can announce several things. Of course, they can put the yields back at 0. There was one voice here and there who says like the first hike may take them straight away into positive, like 0.10%, but I doubt it very much. They can announce the end of the structure where they buy ETFs on their on any 2+% or so setback. That is a possibility as well. They can announce the end of YCC. They can just put it back into the toolbox, or they can keep it as just the reference rate. They won't put back YCC in place. There is absolutely no reason right now. They have not even needed to do anything, although those 3 trillion yen overnight may be a little bit of a hint, as I said. So there are several things they can do, and there are several market reactions to it as well. So a bit contrary to what most people say, that it doesn't matter whether they hike this month or next month. As I've been saying already, I beg to differ slightly there. I think there is some certain importance about signals that they would send. We are at the end of the fiscal year in Japan, all right? So the Japanese companies, they have stuff to do for the end of the fiscal year. They have payments to make. They have profits to repatriate. They have asset managers can need to hedge or manage or balance their books. There's quite a few flows that can happen over the end of the fiscal year. So doing something into the end of the fiscal year, before the fiscal year ends, is, in my opinion, going to send some sort of a signal saying that, okay, we are on our way and we are probably going to move, to continue to move. That is how I would interpret it, okay? But of course, against that, we had those bumper wage negotiation results, and they can just go like, yeah, okay, everything is fine and dandy, and then send the message that, hang on a minute, we are raising the rates because everything is all fine. We can go to zero, but, and that will be for the press conference later, after the meeting. The Bank of Japan can say like, well, hang on a little bit. This is not going to go anywhere fast. We just had all the conditions in place. We do the 0.10, and now we are going perhaps even to wait in April. Now, as I say, it has a bit of a psychological importance. Sorry, it's Monday. Because as I said, if they do it ahead of the end of the fiscal year, it could spur more flows out of all those Japanese corporates and the Japanese whales, the investors, the insurers, the GPIFs of this world. So I think if they would move today, it may have some kind of an impact. And what I would then say and suggest, because a lot of the anticipation, as I understand, a lot of the anticipation of what's to happen for the Bank of Japan has been done by the Western world so far, okay? The biggest moves have been seen in early Europe or in the or when we had during our day comments coming out, especially from Gigi, for instance. I'd say whatever happens here, whether they move or not, and as I said, it's a 50-50, now be very careful and watch what's happening during the Japanese sessions. Because around fixing time, around their early afternoon times, for instance, there may be flows coming into the market, okay, for the reason of the Bank of Japan, of course, but also for the reason that we are into their fiscal year end, okay? Now that is depending on what they do today. If they don't move today, okay, if assuming that they don't move, because that's now, as I said, a 50-50 possibility, then I think the yen should suffer from it. Even though we know that they will move in April, then we have to look at what's happening at the other central banks. And from the other central banks, we heard that the FOMC is not ready to move. We heard from the ECB, they are not ready to move. An interesting one will be, of course, the RBA, because they are going to announce their decision, depending on whether the Bank of Japan announces it, perhaps at the same time, but in theory, just half an hour after the Bank of Japan. But then it's going to depend as well what the other central banks are doing, and the other central banks have not yet hinted at an immediate move. So I think if they don't do anything this week, the yen should suffer a bit. If they do something tomorrow, then we need to look at the details, as I said, what they do with ETF, also what their plans are with the bond buying. As I said, so far, the rumors go in the market that they are planning to buy 6 trillion yen a month, which is sort of equal to what the maturities will look like in fiscal year 2024. So if they only buy what the maturities will be, that means that there's no additional money flowing in the market, and that may have an impact on the Japanese yields as well and on the JGB yields. Okay, so everything will have its importance. I think ETF is going to be the least one because they haven't bought any; they didn't need to buy any over the past year. YCC is just there still by name, but it's a little higher on the importance ladder concerning where the market will expect them to end rates, especially in the 10-year. We will have to look at anything that happens between here, 0.8, 0.85, and the 1% mark. So that has its importance, but of course, it's going to be, to me, mainly the decision whether to get out of negative rates and the amount of the bond buying. That is going to be, to me, the most important factors to watch. Now, looking at dollar yen, I think we've seen these on those GG articles. We've always seen like a quick move down, and then coming back, bigger move down, because that where the expectations were building really for tomorrow morning. But every time we have been coming back. Okay, so to me, we have to look at the extremes is a big word, but at major levels. If ever they don't do anything and they send us to April, that means that there's going to be some kind of free-flowing yen, and we still have to reckon with end of fiscal year flows. But I think there's still going to be people who are positioned for them to move in March, and they may have to take them off, because as I've already been saying so many times, if they don't move, the interest rate differentials remain. We've also seen US and other yields creep back up last week. So I do think that if they don't do anything overnight, we are going to go at least back to that 150, 80, 90. That's going to be the first really important zone. And then, of course, those prior highs, the double top that we had just under 152. Okay, so that's going to be those are going to be very, very important levels. If we break through, there are different expectations. People talk about 154 of those equal legs, and then but the extension of the setback that we had in and I'm going to take just out for now. The extension that we had here, the 127 extension is 155. You know what? If we get a combination of Bank of Japan not moving this month and the Fed not moving either at the end towards the end of the week or in the middle of the week, why not? You know, I mean, this could be possibly getting up there. I'm really not ruling it out. Okay. Now, on the other hand, if they move and if they tell the Japanese that it is time to start hedging more into fiscal year end, and as I said, it's going to be a bit more of a psychological impact more than actually the rates. Okay, but in the first instance, I think we can come back to 148.30 is probably going to be maybe a little bit even too close, but I think here around 147.5, that's always been a bit of a zone where it has seen activity as well. Okay, here even looking left, and that's going to be the first interesting zone, 147.5. Okay, and then to me the big one, and actually somewhere, even though we will already be well inside the cloud here. But there's going to be, to me, a big level is going to be 146, and then just around 145. Okay, so those are the levels: 148.30, 147.5, 146, 145. All right, that's going to be important on the downside. Global picture. Then, if you take those 2 months together, even if they end up in April, let's put it that way, and front running the events a bit, at zero, and the rest of the central banks keep everything in place, I think we may see some kind of the same scenario again, but longer span out. Okay, longer span out, because I reckon if they do something, it can take us all the way into the end of the month, which is the end of the fiscal year of there. Okay, but that's going to be the Japanese somewhere are going to have decisions to make on their own currency, I think, especially into the end of this fiscal year, right? So looking at the rest, Euro Yen, there also we have seen similar moves, quick, and that's the shorter term frame. Similar moves, okay. Go down, creep back up, get down, creep back up, get down, and creep back up. So people were probably positioned a little too much for the an immediate move, and they have needed to scale back because of funding, right? But here, I think on a move, watch what's happening. This is relatively close, but start to watch with this zone here around 161.80, and then 161 the figure. Okay, 161 the figure is going to be your first level that we need to monitor a bit closer. All right, this is about 1% from where we are now. Okay, if they only move 0.10 and they say like, well, okay, we leave all the rest in the toolbox, we are going to continue to buy JGBs and stuff, it may be a short-lived move initially, and then we come back. But if they don't move anything, then I think we need to be very careful here, because if you start to get back above 163 will be too close, but above 163 and a half, 163.70, and especially this high here, the November high before we did the move lower over year end, you know, this 164, 164 and a half, which is also an extension of some setbacks here. That's going to be a very, very big level, in my opinion. And if that would go, then I think there would be another 2% to be done there. All right. So what else? Yeah, we can. Aussie yen is going to be, should be also a big mover, but then and I'm taking the opportunity here to talk now about the RBA. RBA interest rates stand at 4.35%. Okay, they are expected to keep everything in a standstill right now. We've seen exactly the same happening here on Aussie yen that we saw in other crosses, but I'd argue that the Aussie, there may be a bit of a bigger risk of them being slightly more dovish. We have seen a very lukewarm CPI report coming out of the out of Australia. It's been going lower. We're still above the 2 to 3% target range, but it's coming down, and also the employment report, if I recall correctly, wasn't really spectacular. So this is one that could actually suffer quite a bit, I would say, if the Bank of Japan decides to move, and if they are relatively optimistic about the rest of the evolution where things go, and if the RBA then comes out a little dovish. This could be a double whammy for the Aussie yen. Okay, similarly to the other side, but I think the risks for RBA to be hawkish are slightly lower than the ones for them possibly to be a bit on the dovish side. So this is one where I would be very careful, especially if you start to break sub 97 and get into the cloud. Okay, and that is about 130 or so points away, which is very easily done on the combination of those two central bank meetings. Okay, so if there would be yen positivity, RBA negativity, this is perhaps your cross to watch. But again, tread carefully, because it could really move a lot, right? So that for the expectations. Let me now quickly look at what's happening in the Aussie dollar as such. We have seen rejection here, and I know it's a tad, it's getting a tad congested, my charts, but around here, I didn't put it up, but around here was about around the 50 or so percent of the move that we saw in 2024, and it stopped around there, and we got back below. Okay, we're also trading below the cloud, right? It is coming down, so it may get watered down a little bit, but we are trading below the daily cloud on the Aussie dollar. So if the RBA is a little more on the dovish side, this could act as a resistance, and that's really not far away from here. But I'd rather look at stuff like around 66 the figure, all right, after the RBA. Now we have to look at the downside, okay, because it's looking kind of a bit more fragile than it was last week. So if you get a dovish RBA, again, look what's happening in this 65, 25, 40 area. That's going to be the support zone again. If we start to break below 65 and a quarter, the party may be over for the Aussie, and we could go at least 0.5%. Why not a percent lower again? Especially also if we think ahead to the Fed, which should not move this week. If we think about the lower CPI, that is something that could actually weigh on the Aussie. So looking at a dollar pair this week, I think the combination of RBA and FOMC could be a bit of a weight around the Aussie's neck in this week. So that's a little how I look at how things could pan out for the RBA then. All right. Other stuff. Okay, let's quickly look at the other stuff. Yeah, euro dollar. Euro dollar is not moving a lot. Okay. I just want to bring it up here. It's we've got big expiries today around here, really 109 the figure, and that is since we are not having any big announcements or big data today. This could really magnet until for another 3 hours until the 10 a.m. New York expiry. And we could just hang around here. And then it's again going to be, can we get back above this 109.17, or are we going to trade again into this 65.75 zone? Okay. I'm not expecting euro dollar to really do a lot. Volatility is still very low. I'm having a quick look. It ticked up just slightly, but we are still in the low 5% volatility for the 1 month on the euro dollar. Still not a lot of expectations. And even if you look at the weekly going into the FOMC, they're not expecting a lot. But we do see a little bit of activity on some euro crosses. And one that saw this little bit of activity, and that's the one I talked to you about before, is this euro sterling. It ticked up today. I think that has to do with the political side of things in the UK again. Nothing really that pushes the data for the sterling to weaken. But it looks like Sunak is struggling a little bit. So before 61.75, I don't think there's anything to do, but I would not be surprised if we see a bit of a retest of that. And especially as well, that later in the week, we are going to have the combination of CPI, GDP, but that's going to be an old news, but also but also the Bank of England, of course. So if people need to rebalance a bit of their positions, it's possible that we are going to get a look back into this 75.80 before even we get into the numbers. And that's going to be relatively important as well for the one that I am looking at too, which is sterling Swiss. I'm still a bit in, but I'm starting to, not being nervous, but starting to think we may be a little topish into Bank of England, and we also will have the S&P later this week. So there's a close one here around 112.40, which could cause a little bit more of book managing if we get through there. Then there's 112.15, but I think the more important one lies around here, just below 112, the figure right now. Bigger zone is not before 111s, but on the shorter term channel, we have to pay a little bit of attention because we also will have S&P later this week. Just one word about S&P. There's anywhere between 25 and 30% chance that they cut this week. Personally, I think the risk is a tad higher. Okay, that's also one of the reasons why I'm keeping some short Swiss positions. Not only on the sterling Swiss, but I do have a little bit of euro Swiss as well. But euro Swiss is also struggling. You know, this zone here, 96.30, 35. We tried above this morning, rejected it again. We still can't make it up to the bigger zone, 96.75 figure. but we are still above the prior channel, right? And that's around, that comes in quite a bit lower now. But I think 95.5, 95 3/4, 95.5, 95.25. Those are all going to be support zones, I reckon. Whether S&P cuts or not this week. If they don't cut, we can see some book managing there on the S&P as well, on the Euro Swiss as well, on all Swiss pairs. But I think sooner or later S&P is going to cut. There's pressure from the US Swiss corporate side, sorry, as well for a cut. So I think that my personal opinion is that chances are a little bit higher than just the 25-30% that the market is pricing in right now. Okay, I'm coming to the end of my presentation today. We also will have Banxico this week. Now, they're expected to cut 25 BPs, all right? They are expected to cut 25 BPs. But will it really matter that they cut from 11.25 to 11%? I'm thinking that we may have a bit of a blip, but I wouldn't bet my house on it that it really will matter too much. Okay, but actually a bit of a trend line here. There may be some smalls to do here if you get back above 74, but then you're going to have a little bit of resistance around 78, 80 as well, a bit higher in the 80, 85 zone. It all depends what they will say over the meeting, whether they are going to be announcing more cuts and in what size. They can do 0.25% just to say, yeah, we are at the top. We are going to start to normalize. CPI has been coming off over there as well, but let's not forget that they're also at the neighbors of the Fed, and I would say that they won't really start to cut, unlike other LATAM central banks. They probably are at the start of a cutting cycle, yes, but I doubt that they will go like Brazil style or others like the 50 BPs at the time. So I'm still also in a bit of this one. And I think for as long as we are, we could re-enter the wedge when they cut, okay? But for as long as we are under 1840s or so in the Euromex, I doubt that we are in for a reversal yet. But of course, once if it would get back above there, I'll probably leave the boat and reassess. And with that, good friends, I am going to wish you all the very best for this week. Trade safely. There's a lot to happen this week, okay, data-wise, central bank-wise. So be careful with the Bank of Japan. It could be a very big mover. It could be one that moves both sides. So watch out for saloon doors, all right? I don't want to hear any horror stories tomorrow. Have a good day.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.